Morning, good afternoon, and welcome everyone. And I'm very pleased to open today's event for the presentation of the new OECD report, shareholder meetings and corporate governance, and trends and implications. General shareholder meetings are a cornerstone of sound corporate governance, of providing a key platform for shareholders to express their views and to cast their votes on the future direction of the companies in which they invest. So they're important for actual, but also then for prospective shareholders. In recent years now, the way in which companies hold these meetings has transformed, driven by new technologies, regulatory developments, also the improvement in a post-trading environment, but also, of course, due also to the tragic experience of COVID-19 pandemic. So virtual and hybrid formats have become increasingly common, offering so new opportunities for participation, but also raising important questions about accessibility, transparency, and shareholder rights. This new report takes a deep dive into how these trends are playing out across 50 advanced and emerging markets. It presents both a broad comparative analysis and in-depth studies from the Netherlands, Singapore, South Africa, Turkey, and the United Kingdom. Now, a rich and varied picture emerges, revealing both areas of convergence and notable differences in approach, so highlighting valuable opportunities for mutual learning and dialogue. With that, quickly, let's turn to Jean-Paul Servais. Jean-Paul is the chair of the OECD Corporate Governance Committee, is the chair of IOSCO board, and also chair of the Belgian Financial Services and Markets Authority, to present the key finding of the report. Although Jean-Paul could not join us live today due to prior commitments, we are grateful to him for providing a presentation for our webinar. Following Jean-Paul's presentation, I have the pleasure of moderating a panel discussion with 5 distinguished speakers. So let's go with the Jean-Paul presentation, please.
Good morning, good afternoon, good evening, ladies and gentlemen. Welcome to this webinar for the presentation of the new OECD report that we just approved during the last meeting of the OECD Corporate Governance. And this report is, of course, the shareholders meeting and corporate governance trends and implications. As the new chair of the OECD Corporate Governance Committee, it's a real pleasure for me to present the findings of this new study, which I believe offers rich insight for policy makers, regulators, investors, and companies. And this report, ladies and gentlemen, comes at a time when the way companies engage with their shareholders is evolving rapidly, driven, of course, by technological change, global crisis, and shareholder activism. Let me take first a moment to walk you through the structure of today's presentation. And I will begin with a look at the structure and scope of the report. Then I will move to some of the most important findings observed in shareholders meeting framework and practices around the world and their policy implication. And finally, I will turn to some brief conclusions. With that, let's begin with the structure and scope. This report examines the framework and practices for general shareholders meeting of publicly traded companies in 50 advanced and emerging markets as of end 2024. But also important to stress, ladies and gentlemen, this report also features 5 in-depth case studies covering the Netherlands, Singapore, South Africa, Turkey, and the United Kingdom. This work is also part of the OECD ongoing effort to monitor and support implementation of the well-known G20 OECD principle of corporate governance. The principle provide, as you know, ladies and gentlemen, are globally recognized standards to help policymakers and regulators strengthen the legal framework and corporate governance practices in their market. The principle recognizes general shareholder meeting as a key component of the corporate governance framework. One of its new recommendations added in 2023 addresses virtual and hybrid shareholder meetings involving remote participation, and as you can see on the slide, it recommends that, quote, such meeting should be conducted in a manner that ensures equal access to information and opportunities for participation of all shareholders. This emphasis on the inclusiveness and transparency is essential for meaningful engagement and trust, which is very important when we speak about corporate governance principles. I will now highlight some of the most interesting findings and policy issues of the report. And from this point of view, I have to say that one of the most significant trends observed concerns how shareholder meetings are conducted. The COVID-19 pandemic was a key catalyst. What began as a temporary shift to remote meeting has in many cases become a permanent feature of legal frameworks. And as you can see in the two pie chart on the left, 87% of legal framework allow companies to hold virtual-only meetings, and 94% permit hybrid meetings with both remote and in-person participation. Many recent reforms were passed or are being considered to allow virtual-only meetings. As the figure on the right shows, while virtual-only meetings were the dominant practice in 2021, driven, of course, by the COVID-19 pandemic, in more recent years, hybrid meetings have shown the most growth, and in-person meetings have also made a modest comeback. I think it's fair to say when we see, I would say, how to explain that with a fact-finding approach, I would say a neutral statement, that shareholders' activism and security concerns are prompting a move to virtual-only meetings in some markets. Protests at in-person AGM have led to increased security. And from a corporate perspective, virtual format offers a way to mitigate this risk. It's just, I would say, a statement relating to a pure fact-finding approach. At the same time, it's also fair to say that shareholders expect a say on adoption of virtual format. And as the pending every exception expires, many companies are now seeking shareholders' approval to allow virtual participation on a more permanent basis. And in this context, transparency and clarity are key. Clearly defined rules, for example, on when virtual only meetings can be used and under what conditions can help foster trust and confidence. That said, in-person meetings continue to hold strong appeal in many countries. In 2024, over 90% of meetings in Singapore and more than two-thirds in the United Kingdom were still held physically. Another important finding of the report is that regulators are playing an increasingly active role in shaping shareholders' meeting conduct. And over half of jurisdictions now offer specific guidance on key aspects like remote participation, voting, and Q&A processes. Some comments, if I may know, about voting eligibility frameworks. Needless to say that effective shareholder participation, especially by retail and foreign investors, depends on transparent, reliable voting mechanism at AGM. Yet practices vary widely around record dates of ownership, which is determined, as you know, which shareholders are eligible to vote and proxy cutoff deadline. The report that we just approved finds that over 90% of jurisdictions legally set record dates. And in most cases, deadlines are set within 1 week of the AGM. Yet, there is no global standard on when record dates should be set, how they are applied, and how they are disclosed, creating challenges, especially for foreign investors. What does it mean, ladies and gentlemen? It means that to improve participation and consistency, more convergence on record date practices and eliminating share blocking restriction could facilitate shareholders voting. Setting record dates closer to the meeting day can also help prevent outdated ownership from influencing decisions. Proxy voting remains a critical tool for many investors, yet cutoff dates for proxy submission are often undefined by laws and left to market on company discretion. Aligning cutoff dates to the meeting day could also allow shareholders to vote with the most up-to-date information. Some comment, if I may, about shareholder engagement and Q&As. As you know, shareholders' engagement through questions is a common feature, but how it's handled varies widely. Most countries have requirements or recommendations allowing questions to be submitted before the AGM. However, half of jurisdictions do not impose a clear deadline for submitting questions prior to the AGM. Transparency during AGM is also still lacking in many jurisdictions, and in over half of jurisdictions, companies are not required to respond to all questions raised during the meeting, with no need to follow up with a response afterward. And this lack of accountability can discourage engagement and erode trust. It has to be stressed. Knowing that, it goes without saying that meeting chairs can play a key role, but few jurisdictions offer guidance on how to manage Q&A, especially for grouping questions, posing time limits for intervention, or entrance online, and important voices are balanced. Ultimately, more guidance to enhance transparency, clarify meeting structure, and convergence, especially in how questions are submitted, selected, and answered, could significantly improve shareholders' confidence and engagement at AGM. Another new topic, if I may say, when we speak about corporate governance principles, is linked to shareholders' resolution. Why? Just because shareholders' proposals are rising globally on a wide range of issues. And the process for submitting resolution before our AGM usually requires shareholders to meet ownership threshold. Recently, legal challenges in some jurisdictions have created uncertainty around this right and companies' discretion in tabling such resolution or not. In contrast, submitting new resolution during AGM is generally more limited. In some jurisdictions, it's nearly impossible due to requirements like unanimous shareholder presence. In other cases, this right is limited to new resolution on items already on the agenda or specific issue. Both approaches aim to avoid disadvantaging absentee shareholders who may have already voted. And going forward, clarifying when and how companies can legitimately reject shareholders' proposal before AGM and aligning practices across jurisdictions could bring more consistency and predictability to this key governance tool, while also protecting shareholders' ability to participate, whether present at the meeting or not. Another important aspect of finding, which has been developed and explained in this new report, it's about vote counting and vote confirmation. 1/3 of jurisdictions still lack formal procedure or recommendation for vote counting and confirmation. This is a significant gap. And when these are provided, end-to-end confirmation and designating an independent third party are the most common practices. And it's important to remember that the format of the meeting matters. In-person AGM often rely on manual vote counting, such as show of hands, and by contrast, and it's not a surprise, virtual or hybrid meetings tend to use electronic tools to count votes. This variation, along with tight timelines for reporting results, can lead to errors. And when there is no system in place for end-to-end vote confirmation, those errors can ultimately undermine investor trust. Let me now turn, ladies and gentlemen, to some concluding remarks. Even if, of course, I am not objective in my capacity as chair of the OECD Corporate Governance Committee, I think that it's fair to say that this report provides timely and actionable insight for policymakers, regulators, investors, and companies. It reveals areas of strong convergence, good news, I would say, but also highlight where more alignment, guidance, and support may be needed to promote fairness, inclusion, and transparency in shareholders' meetings. That's also, ladies and gentlemen, the added value for having a corporate governance committee at OECD level. And more generally speaking, I think that we may say that the findings highlight the importance of ensuring that shareholder rights are upheld regardless of meeting format in line with the G20 OECD principle. They also point to the role of clear guidance in fostering more transparent and effective engagement. And that's the reason why, ladies and gentlemen, I encourage you to explore the full report for a deeper dive into the data and additional insight. With that, I will hand the floor back to our moderator, Carmine Di Noia, to open the panel discussion. Thank you.
Okay, so thank you, Jean-Paul, for this very comprehensive presentation. Let me now also thank our distinguished speakers for being here today. I'm very pleased to moderate this discussion composed of 5 experts, practitioners representing also the public sector and market participants with diverse and complementary point of view. And with many of them, we have already been discussing these issues for many years. So before starting, let me just introduce them. We have Astrid Ludin, is the Deputy Commissioner for the Financial Sector Conduct Authority, FSCA of South Africa, chairing G20 this year. She has vast experience also in the public sector and stakeholders management, as well as in company law and financial regulation. Also, Astrid is the chair of IOPS, of the international organization, the IOSCO of pension fund supervisors, in a sense. Then we have Rins Abma, is the executive director of Eumedion, the Dutch corporate governance and sustainability platform for institutional investors, but he's a former senior policy advisor for the Ministry of Finance and the secretary of the Dutch Monitoring Committee for Corporate Governance, among many other roles. Marcello Bianchi is the deputy director general of Asonime, the Italian Association of Joint Stock Companies, but also he knows the principles very well because he was previously a chair of the OECD Corporate Governance Committee from a decade, 2007 to 2017, and when he was also at Consob and in having many roles on some corporate governance issues. Severin Nevort is the global policy director of ICGN, International Corporate Governance Network, an organization led by investors responsible for assets under management of more than 90 trillion US dollars. She's an expert in the banking and financial regulation industry, focusing on ESG and sustainability. And last but not at all least, Ekrem Arikani is the Chief Executive Officer of the Central Securities Depository of Turkey, MKK, the agency responsible for managing the centralized electronic general meeting platform, often envied by all over the world. He has extensive experience in the IT and business industry. Now, for today's discussion, there will be 2 rounds of questions. We need to be quick. I will ask each speaker 1 question at a time to share their views and insights. To that end, I'll remind our speakers to please answer within 3 minutes. And towards the end, should time permit, we will also open up the floor for a Q&A with the audience, and would encourage you to type your question using the chat function. So let's now turn to our panel discussion. First question, let me start with Astrid. Now, Astrid, it seems that South Africa was really very well prepared to adapt its AGM to the COVID-19 pandemic, allowing for virtual AGMs in your company law well before this format became more commonplace in practice. The report notes that virtual meetings are still the preferred format for most South African listed companies. At the same time, the hybrid format is becoming more popular. So how would you explain this shift? And do you think the move to hybrid format should be encouraged? Astrid, please.
Thank you, Carmine. Yes, South Africa was well placed when the COVID pandemic hit us all. So, and that was mostly because in early 2000, we underwent a fundamental review of our company law. And in that review, particular attention was paid to enabling or preparing for the future. So we looked at accommodating electronic transactions and engagements. And this law came into force in 2008. It had very specific requirements for virtual meetings. And it required specifically that the electronic communication should enable all persons participating in a meeting to communicate concurrently with each other. So that meant that they shouldn't only be able to communicate with the chair of the meeting, but also with other persons in the meeting. And of course, these requirements weren't straightforward. So in fact, there weren't any virtual meetings before the COVID pandemic hit South Africa and the rest of the world. In the lead up to the pandemic, a number of service providers started thinking about e-voting solutions, not just about proxy voting, but actually voting at meetings. And in South Africa, this was a competitive environment. I know in some other jurisdictions, this was mandated to a single service provider. But so these different parties then started looking at the law and preparing. And so that's why we were fortunate when the pandemic hit us, that the transition to virtual meetings was seamless for us. And virtual meetings have remained very popular in South Africa. I think it's because we are a digitally connected society, but also geographically dispersed. So virtual meetings have huge cost benefits for investors as well as for companies. It's also, of course, makes meetings internationally accessible. So as you indicated today, only 12% of the meetings are in fact in person and 25% are still in a hybrid form. The remainder is virtual, and we've seen different movements. But the shift, I think in our jurisdiction, virtual meetings are there to stay. Of course, virtual meetings are not preferred by everybody. A lot of the more activist shareholders have indicated to us that they prefer hybrid meetings. And I know that's also the trend in other jurisdictions. And I think this is mostly because the level of engagement in a hybrid meeting is generally greater than in a virtual meeting. But there's a danger in hybrid meetings, of course, that the virtual participants don't receive all the attention that's needed. So I think at what's really at stake is not the format of the meeting, but that the virtual meeting format is not used to stifle engagement. We've certainly seen that in South Africa, that companies have moved to virtual-only meetings to prevent disruptions at meetings by activists. So I think, what we need to do is we need to be clearer about what we expect, how we expect meetings to be conducted, especially virtual meetings. And, as with all digital transactions, the rules and requirements are still evolving. So this is an area we all need to pay attention to.
Thank you very much, Astrid. Now moving to Rins. It's good to read so that shareholder engagement and voting turnout have increased in the Netherlands, in the largest publicly traded companies. Now, how would you explain this positive trend and as an active non-profit organization representing institutional investors? Please, Rins.
Yes, in the Netherlands, average voter turnout at shareholders' meetings increased from approximately 33% in 2005 to 80% last year. So that is indeed a very steep increase. And there are a number of explanations for this increase. The first is the continuing pressure on institutional investors to make use of their voting rights. And you have to take into account that domestic and foreign institutional investors constitute around 70% of the Dutch listed shares. And the clients and ultimate beneficiaries of institutional investors increasingly expect that pension funds, insurance companies, and asset managers take a position on issues such as executive remuneration, capital allocation, and climate change, and to use their voting power to influence the investee company's behavior. In addition, corporate governance and stewardship codes, as well as EU and national legislation, nudged institutional investors to cast their votes at shareholders' meetings. For example, virtually all stewardship codes encourage institutional investors to vote at shareholder meetings. And the revised EU Shareholder Rights Directive has also played an encouraging role, because this directive contains specific provisions for institutional investors to implement an engagement policy. And part of that engagement policy is voting at shareholder meetings. And moreover, they are expected to disclose voting behavior and to explain key votes. And partly as a result of these factors, approximately 90% of institutional investors vote now at Dutch shareholder meetings, and that is much higher than the voting appetite among retail shareholders, because only 29% of them participate in the decision-making process at shareholder meetings. I think the willingness to vote by institutional investors was also boosted by the implementation of the original EU Shareholder Rights Directive, the so-called SRD1. And since this directive was implemented into Dutch law, listed companies may no longer require shareholders to block their shares for a certain period in order to be allowed to vote at shareholder meetings. And share blocking has long kept a significant portion of institutional investors from participating in the decision-making process at shareholder meetings, because the costs and risks of trading restrictions are potentially high. And furthermore, the minimum convocation period for a shareholder meeting was extended from 15 to 42 days. So since then, shareholders also have more time to analyze the AGM materials and are thus better equipped to cast their votes. And the longer convocation date also allows more and better engagement with the company if a resolution is unclear or needs better understanding what the rationale is for a resolution. So I think these are the main explanations for the steep increase in shareholder voting turnout at Dutch shareholder meetings, Carmine.
Thank you very much, Rins. And Marcello, now, as also in a sense now with your role as the only person, I would say, of the panel representing directly, listed companies. So how do you see the recent evolution of practices for for shareholder meetings in an important market like Italy. You see shareholder activism and the shareholder interest in engaging on issues also such as the new one, I would say, climate change, ESG issues, executive pay. You see these as a healthy development. What challenges, in case, does it raise for companies seeking to follow best practices and for engaging with their shareholders? And how do you think companies can effectively address such challenges? Marcello.
Yes, thank you. In principle, shareholder activism is very positive for companies because it helps company to monitor and understand better the market sentiment than just following the exit. So the evolution of selling and buying in the market. Because through their voice, shareholder can explain what they want, what they think about companies. So it's a useful tool, in particular when the exit practice is not manageable. Let's think to passive investor or quasi-passive strategy. In practice, activism in some situation cannot be so effective as exit in sending the real signals, as priorities of activism can be affected by political agendas. In general, so the political agendas in general of the society, and by political agendas by specific investors. Consider, for example, the issue of say on climate. That was considered the issue for the evolution of AGM competencies a few years ago, but now is virtually disappearing. So shareholder activism is very positive for companies, but not necessarily the general meeting are the best place for the exercise of the dialogue with shareholders. What is maybe more important is to develop the dialogue with shareholders on an ongoing basis. And in this perspective, we have seen very positive evolution by both companies and investors in developing specific policies for managing the ongoing dialogue between companies and investors, and also the outcome of those dialogue are very satisfactory for companies and maybe more useful than the activism in the meeting itself.
Thank you, Marcello and Severin. Now, some companies have suggest that general meetings are losing their role as an engagement and decision-making forum for companies. Maybe in part also what Marcello was saying. Maybe this is because in many countries, and also Rint was mentioning the shareholder rights directive, but basically, the engagement is on a continuous basis, and then votes are cast so by proxy and are known in advance, and companies may conduct also conversations directly with major shareholders outside the AGM, especially with institutional investors. So such advanced engagement has prompted some companies to view the AGM as a formality to comply with. Now, do you see outside engagement as undermining or weakening the relevance of the AGM itself? If you consider this a problem, what solution could be considered? Severin, please.
Thank you, Carmine. So I would like to start by saying that this is a great report. I thought it was really, really important and really interesting. With this publication, the OECD can really help regulators, corporate governance code, companies see best practices, look at their neighbors, look at other countries, and we can help raise the bar and best practices globally. So it's a very important report. So to answer your question, I see the point that the role of the AGM has evolved, and we've seen it in your report, and the way they are conducted has evolved. But when I hear companies say, anyway, we've met with our major shareholders throughout the year, so the AGM is a formality, is a waste of time. We've heard that. Italy has pushed this reasoning to an extreme. Marcello, I'm not trying to provoke you, but Italy is also one of the boxes in the report, right? By allowing closed doors AGMs, where investors don't take part, not virtually, not physically. For institutional investors, this rhetoric is worrying. So yes, there is an ongoing engagement, and it's very positive, a dialogue between companies and their investors throughout the year, where investors may meet the CEO or the board members to talk about strategy, to talk about trends affecting the industry, which helps investors understand the company better. Or there are stewardship dialogues where maybe the investor has a certain objective in mind when engaging with the company, for instance, making sure that the company is managing material risks. So this dialogue is very important, but let's be clear, access to senior management and board is easier when you're a larger shareholder. The AGM has a very different function. I see the AGM as a moment of accountability, where all investors, also retail investors, also the local pension funds, or different types of investors, have an opportunity to meet the CEO and ideally the whole board, because they are also owners of the company. I think it's part of shareholder democracy, and I have the impression that shareholder democracy is a little bit under threat. We could say arguably all kinds of democracy are under threat at the moment. So let's think of the AGM of the future. ICGN has published a position a few years ago, and we think the hybrid meeting is the best model for the AGM at the moment. And I think the report shows that this is a trend and it's encouraging. When fully virtual AGMs are conducted, we discussed this, right? Some safeguards need to be in place. So the decision to hold virtual AGMs should be approved by shareholders. There should be a time limit, ideally, so you shouldn't have these clauses for perpetuity. Investors will want to know the rationale for the decision to allow to have a virtual format. Maybe for some company it makes sense and investors will understand. Investors should be able to ask questions, but also follow-up questions, so you kind of replicate a little bit the real AGM format. And the technology needs to work. But we had at ACGN lengthy discussions with investors who are members of ACGN. So as you mentioned, Carmine, they represent $90 trillion of asset under management. And there is a clear consensus, a large majority of our members think the hybrid meeting is the best format. Thanks.
Thank you, Severine. And okay, turn to Ekrem. I will make maybe some comments later. Turkey, Ekrem has, by the way, the G20 principles were, OECD principles were endorsed by G20 when it was the Turkish presidency. We had important discussion there. Now, Turkey has a unique centralized platform system for conducting general meetings since actually 2012. And these e-GEM platform, which are central securities depository managers, use a technology so to ensure that all AGMs allow shareholders to participate in person and virtually. This mandatory hybrid format is accompanied by relatively detailed requirements and guidance on all elements related to the preparation and conduct of these meetings, and the presence of a ministry, this is interesting, represented during AGMs. What has been your experience with this rather unique approach, and are both shareholders and companies fully satisfied with how the system works in Turkey? Ekrem.
Okay, thanks a lot. First of all, hello to all audiences, and thanks a lot for this organization to OECD. And thanks again for this good question to explain what we are doing here for EGM solution. So actually, if I start from our general business as a CSD company, we're grouping our services under 4 headlines, actually. As a CSD company, we are, of course, keeping centralized securities data, and the second one, data services. And the third one in our business is corporate governance solutions. And the fourth one is investor relations services. corporate governance services are so important, and we are giving so much importance to this group of services. And like public disclosure platform, general meeting solution is also a very important service for MKK. Actually, during the preparation phase of the legislation on electronic general meetings, we maintained close and active communication, not only with the regulatory authority, the Capital Markets Authority and Minister of Trade, but also with all the stakeholders involved in the general meeting process, actually. When we were preparing this solution in year 2010 and 11, we discussed with lots of parties, not only, as I told, the authorities, also with companies and all shareholders. From the very beginning, we didn't want to build just a system where shareholders could only vote before the meeting. We aimed to create a fully integrated platform where every step could be carried out electronically and from a single center, before the meeting, during the meeting, and also after the general meeting. As a result, all stakeholders, companies, shareholders, and investment institutions can now manage the entire general meeting process from one centralized platform. Providing this service from a central location ensure the high and consistent service standard while also reducing cost for all stakeholders. Thanks to this system, the general meeting system, companies can directly send out meeting invitations to shareholders, reaching them more easily and efficiently. And also it's very integrated with our platform, with our other platforms. For example, we have another solution for investors, e-investor, and as I told, the public disclosure platform. All these systems are integrated and communicating with each other. Shareholders, in turn, can access all meeting documents online and attend the meeting from anywhere without needing to block their shares, actually. They can watch the live broadcast of the meeting, share their opinions in real time, and even assign a proxy without having to visit a notary. And as you mentioned, actually, it's a hybrid solution. They can attend physically or digitally. Since year 2012, we have treated every general meeting with the same care and diligence as if it were our own. And we have always been there to guide and support all stakeholders whenever they needed any support. And we have in Turkish stock markets almost 600 companies, public companies. It's an obligation for them. But during the pandemic and after that, lots of other companies started to use it. Even they are not public companies. Even, for example, Central Bank of Türkiye, they're using for years this solution. When we look at participation figures, it's clear that more than 2/3 of attendees now join meetings through the electronic platform. I believe the key to this success lies in our ongoing dialogue with stakeholders from day one and in our commitment to delivering a service that goes beyond expectations. Actually, we customized even this solution to other countries. In Indonesia, they are using it, and even for not only for companies general meetings, also for bondholder meetings, they are using it as well. And it's very customizable, and we can change according to the market needs. And if we frequently, I can share openly that we frequently hear from them, all users from companies and all shareholders, how satisfied they are with the system, and they are sharing their satisfaction with their happiness to use it, and their the satisfaction level is also very high as far as we can see. I can simply summarize the usage in Turkey. So,
thank you very much. Very interesting. Would be also interesting to understand if there are many foreign shareholders along many different chains of intermediaries. But let's go quickly to the second round. And I'm sorry if there is some noise in the background, was at the beginning, but we have some shareholder meetings also in the room next to us. Now, Rins, the legislative proposal that you have now in the Netherlands, known as the Digital General Meeting of Private Law Legal Entities Act. So this was submitted to the Dutch Parliament last year. Now, the law would allow publicly traded companies and others to conduct a fully digital general meeting. Now, however, this will be contingent upon the company's articles of association explicitly permitting such meetings. Now, if this law passes, would you expect a big shift by Dutch companies to fully virtual meetings, and what would be shareholder reactions? Please, Rins.
Yeah, so that law is still pending in Dutch Parliament. We expect in 2 weeks' time plenary discussion in the House of Representatives, and after that it will go to the Senate. But according to the bill, shareholders must approve the inclusion of the fully virtual meeting option in the company's articles of association, and as a result, I don't expect a big shift to fully virtual meetings here in the Netherlands. Shareholders of Dutch listed companies, including institutional investors, are in general in favor of holding hybrid shareholder meetings. So they have concerns with respect to holding fully virtual meetings. Only in extraordinary situations such as a pandemic, a natural disaster, a terroristic threat, a war, or any other situation in which the safety of shareholders and other AGM attendees cannot be guaranteed, institutional investors see the necessity of conducting the annual general meeting entirely virtually. We see already a trend among Dutch listed companies to prepare a protocol which includes additional conditions for holding a fully virtual meeting. The first 2 companies have now that protocol on their website. In these protocols, it is reflected that a mandatory condition for holding the annual general meeting entirely virtual is that where the company cannot guarantee the health and safety of the shareholders and other attendees. A fully virtual extraordinary shareholders meeting may be held if only non-controversial resolutions are placed on the agenda, such as the undisputable appointment of a supervisory director. The protocols were established in close consultation with shareholders and shareholder organizations, and these protocols cannot be amended without prior consultations of the shareholders. So we hope that this trend with working with protocols continues, and that the annual general meeting is at least held in person or hybrid, barring extraordinary circumstances, and more flexibility may be granted to holding extraordinary general meetings. So it is another example where, together with shareholders and with listed companies, a practical solution is now in place for the first companies that move to the virtual fully format in their articles of association.
Thank you, Rins. Back to Marcello. Marcello, given the diverse characteristics of companies and shareholders, the operation of AGMs have been traditionally, largely left to companies' discretion by laws, rules. So with regulatory frameworks setting only minimum standards. Now, however, the report actually indicates that an increasing number of regulators are revising requirements or issuing guidance on the conduct of shareholder meetings. And this is done particularly to help companies navigate the transition from traditional in-person meetings to virtual formats. So do you think it's beneficial for public agencies, and you have been also there in that role for many years, to issue such requirements and guidance on the operation of AGMs to encourage more constructive dialogue, or should these be left to companies and shareholders? Marcello.
Thank you. My short answer to your question is that, in my view, private ordering is the best way to address not only a diversified situation, but also a rapidly evolving framework. because we have to face not only technological changes and opportunities, but also very relevant structural changes in the typology of investors and also in their attitude. With respect to the effect on the annual general meeting, we have to recognize that the traditional direct physical presence of shareholders in the meeting is rather the exception more than the rule. Usually, investors, in particular institutional investors, vote by proxy and well in advance with respect to the general meeting. So this is the reality of general meeting. And so I take the opportunity also to make a comment on what Severin said before, that the condition in the Italian system for allowing for so-called closed door meetings are not a real threat to the shareholders' rights, because usually shareholders are not present in the meeting. But I do not absolutely share the view that general meetings are a waste of time, but we have to focus on what is more relevant from the point of view of for the protection of investors. And in my view, these issues are the quality and the timing of pre-meeting information and the effectiveness of the exercise of the shareholder rights, like put an issue in the agenda, propose resolution, put question, and receive useful answers. But that cannot be realized during the meeting, because in the meeting, usually shareholders are not there. So, and I think that the most relevant threat to the interests of investor is that something unexpected happens during the meeting, because they are not there, they cannot change their instruction of voting. So having resolution, proposal of resolution directly during the meeting, but even Q&A, when you cannot take into consideration what's happening during the meeting, it's actually affecting negatively their attitude. So it's complex, and I think that establishing mandatory rules would be dangerous and lead to the dialectic also between the shareholders and companies to establish the right.
Thank you, Marcello. We need to be slightly quicker. Crema, now the EGM platform is allowed to decrease. Actually, it's incredible. You see the data, the record date deadline. So basically, the end of the day before the meeting, which is one of the shortest among the 50 economies we surveyed, and so to remove share blocking, which was imposed before 2012. And the platform also has allowed to decrease bureaucracy and cost charged by local custodians. Now, as voting chain become more and more complex, and there is no uniform standard to set for setting record dates, what's your advice to other jurisdictions? And what key lesson from the EGM platform could be useful to as other countries aim to revise their voting framework? Ekrem, quickly, please, a couple of minutes.
Thanks. So I can first just start maybe from the MQK structure. Since we are keeping all the data investor based according to beneficial owner, so we can share all the last updated shareholder data with the companies. It's important as a CSD. It's very possible for, of course, and our market structure is designed according to it. We can keep all the data just before the end of the market day, just before the general meeting of the company. It's very important, I can say it so. And for other countries who plan a system like this one, I can share our practices and experience with some points. First of all, we think that it should be mandatory. Mandating the use of electronic general meeting system is important, at least for publicly listed companies. Because if it's not possible, then companies might choose not to offer this option to their shareholders. The second one is that when drafting electronic general meeting regulations, the entire process, starting from the meeting invitation and including participation, voting, and all proxy assignments, should be designed to take place fully in electronic form and involve all relevant stakeholders, companies, shareholders, proxies, all parties. The third one is, although it's reasonable to offer shareholders multiple login options, like e-signature, username, password, preference should be given to methods that prevent unauthorized access and ensure secure identification. We have, in Türkiye case, we have a e-state platform. All solutions are integrated on it. We are planning to design the solution, the login design over it to the AGM solution. The fourth one is regulations should not restrict physical attendance. A hybrid model allowing both physical and electronic participation is preferable, actually. And we are giving this opportunity from the start in year 2012 in hybrid model. Otherwise, shareholders who for various reasons wish to attend in person could be disadvantaged. And the fifth one is, actually, it's highly recommended that periodic technical and cybersecurity audits of the electronic general meeting system should be mandatory through regulation. And the sixth one is, finally, it's essential to clearly define who is liable for any damages arising during the operation of the system. This clarity will enhance trust among all parties involved, because interruption is in such a system is very critical, and it's not acceptable, of course, for companies. Cybersecurity, technical satisfaction is very important in this solution. I can summarize our experience with these matters for general meeting solution.
Thank you, Ekrem. We are a bit rushing Astrid. Now, we understand that some activist investors in South Africa have filed some complaints, so formally related to companies' willingness to table shareholder resolution that they have sought to have considered for an AGM vote, specifically related to climate change issues. And on the other hand, some companies have argued that such proposals go too far in seeking to override management discretion, or actually have been received even too late to provide all shareholders with adequate and timely information to consider that. So I'd be interested to hearing your views on this issue. What do you see as the appropriate balance between companies' interest and in managing and controlling the agenda of what shareholders decide, and shareholders' interest in insisting on votes on issues where the company's board and management may not support? Astrid, quickly.
Carmine, I think this question goes to the heart of the role of the AGM. And, we've talked about the evolving nature of shareholder dialogue. Both Severine and Marcello talked about it. But Severine said something that I thought was very important. She said that the AGM is particularly important because it's the only forum where management is held to account. So it's there for accountability purposes. So I think that's a key issue. And if we think about the rights that shareholders have to table resolutions and to get votes on those, I think we should be very careful to undermine that in any way. Even when, these resolutions can be uncomfortable, and because if we do that, I think then AGMs will become meaningless meetings. So these shareholder rights do need to be protected in law, and they should be enforced. So in South Africa, any two shareholders can propose a resolution, and they can require it to be tabled at an AGM. The only requirements are that these resolutions need to be clear and specific, and that they need to provide sufficient information to support those. So I think if those requirements are met, certainly in our jurisdictions, those resolutions should be proceeded with, and there should be no reason why they can't be tabled. I think the only qualification here is perhaps one that Marcelo mentioned, which is that it's important for all shareholders that they have information, especially if they're going to be voting up front and use the proxy voting system. So, we need to preserve shareholder rights to table resolutions, and particularly in the South African context, but shareholders also need to operate within the legal framework that we have. Thanks.
Thank you, Astrid. Severin, last but not least, investors' ability to act as a responsible, effective steward is reliant on them having rights, including voting rights. Now, what do institutional investors need to make informed voting decisions, and are there any obstacles to this? Very quickly, telegraphic.
Thank you, Carmine. Yes, it's a point of your report that I thought was really important, and it's a little bit technical, so it doesn't get a lot of attention. But in the proxy chain, in the timeline that goes from the company announcing a meeting to the meeting itself, there are some important milestones. And for the investors to be able to vote in an informed manner, we need every step to work efficiently. And it's not always the case. And your report highlights very well some of the obstacles to an efficient voting process. So we talked about electronic voting being important. We talked about share blocking. They need to really remove these practices. And I think there is also a need to make sure that companies send meeting materials or the documents in time so that investors have the time indeed to do their research and analysis, but also for the cutoff date. So there's a bit of a jargon, but the date by which the investor will need to send their voting instruction to the custodian. This can't be too early, because if the cutoff date is too early, again, you are not making a decision on the basis of the latest information. So some of these, I would say, technical matters are well addressed in your report, and I would encourage everyone to read it. Thanks.
Thank you, Severin. We are just 3 minutes late, so thank you, all very much. I think this has been very, very informative. I will prepare to attend. I typically bring my students to general meetings, and they also like it very much. It would be nice if all shareholders, including majority shareholders, but also institutional investors, for example, they, irrespective of the vote that they have already expressed or that will express, they make declaration of vote to make really the AGM still significant and not an empty share. But thank you very much. We will also reflect on this. I hope also all the attendees enjoyed. And again, read again and carefully all the reports, and have a nice rest of the day. Thank you. Bye-bye.